In this video, I'm going to show you how to have moving averages and use them as your stop loss to help you build more effective trailing stops, which will help you keep your profits and get bigger trades. And so let's go ahead and show you what moving averages we want to look at. First, we're going to go to Insert Indicators, and we're going to do Trend and then Moving Average. And so the first one I want to talk about is the exponential, which is the 20-period exponential moving average, or not 29 period. Okay, and I like to make it a little thicker so I can see it. So you can just change the thickness by going like that. I like it a little thicker. I don't like it too thick because then it's too big, so I just go right there. All right, now, the 9-period moving average is a great one to add because it hugs the top of the candles. So you could use just regular candlestick bases, but it hugs the top of the candles. So let's zoom up a little bit and let's take a look. So if your entry, let's say we were trading a trend line break and we had a move right here and we broke in and we got in right here. So let's say that's our entry. Put our stop below the candles, and then once you're moving up, you'll notice that this trend just keeps on trucking, right? And then eventually it goes sideways, and then boom, it crosses below. So your actual exit right here would be here. And so in this particular scenario, we would have gotten a very nice 45 pips on a 15-minute trade. And sometimes the market is going sideways, like here it's chop, 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 chop. And so that's one of the things you need to know about this, is you want to make sure that the market is trending, right? So this only works when the market is trending, but to be completely honest on our trading strategy, we only want to be in trades when the market is trending. We don't want to be in the market in this mess here because this will get you stopped out. And so the other thing that we want to remember about this particular strategy or money management strategy is that once it gets to the top like this and goes sideways, a lot of times it will roll over and you'll start to lose profit. Now, it can do what we saw here, which is consolidate and then continue the move. When you get a consolidation, there's a couple things that can happen. It'll consolidate and continue the move like that. Or maybe it'll consolidate, fake down, then continue the move. And in which case you could take this trade here to here, and then you could take the other trade here to here if it's a fake out. So those are some things that can happen. Or it can consolidate and then reverse on you and reverse. So either way, when it consolidates, I always take my profit, and that's where this moving average comes in. Now, let's take a look here at how we would trade this. So I would take this entry. You can see we got a MACD cross, we got trend line breakout, we got a resistance point. So to me, that's like, okay, it's saying let's go. Plus overall, I've been watching this pair's been trending up. So overall, that's just what I would want to do. So that would be my entry. And now how would I trail this? Well, I could either just let it go and let the trade play out and then close it, or I could step my stop. And that's probably more likely what I would do. So if I had my entry here, once I get a new high, that's where these fractals come into play. When it hits a new fractal, you just move your stop below the fractal. So here's a fractal. Now all of a sudden, when I get a new fractal here, it hits, I move my stop. Now we get another one right here, and then then I could tighten my stop again. Now, additionally, you can then tighten it under each candle as it happens, because these candles act as resistance. So if we would have done that, this would have been the stop, and then it's really very close to where you would have got out anyways, right there. So that's another method of managing the stop. But what I usually will do is I will just get in and I will move my stop to break even when I have one fractal. So at this point, we got fractal 1, fractal 2 is my break even point. I'm at break even. And then more than likely with my trading, I'm not going to even be in the trade at this point because I'll have my take profit somewhere up here and I'll hit my TP. However, you want to try to let the trade run as much as possible. So when you see this momentum start to build up, you want to try to allow it to get into the trade and to allow it to move forward. Now, as John always says, when you got your profit, you want to take your profit, but it is a balancing act. And John will tell you, you only way you're going to get the big trades is if you give it some room and let it run. And when you have momentum, you want to try to take advantage of that, because ultimately, if you're just getting these one little one trades, you're never going to grow, because then you'll give all your money back to the market. So the idea is to get some of these big ones, and then that way you'll be able to do really well. Now, another advantage for using this 9 period is a tight stop loss. Okay, so let's just say that I get into a trade and I go short right here. So it crosses below right here and I go short. Now, if my stop loss is all the way up here and my entry's here and I'm going short and I'm trying to go back down. So there's nothing wrong with this trade. I mean, we got a trend line. It broke the trend line. And you're not going to get all the trades right. The MACD's moving lower. Everything in this trade is good. Nothing wrong with it. However, this stop is pretty big. When you're trading reversals, your stop can be pretty large. And as I had just mentioned, we want to keep our losers smaller. And so one way to do it is when it's below this moving average, we short. But then once it pops back up, we get out, right? And so you can use this 9 period as a safety net on your stop loss. And so let's just think about this. If I'm risking 1% of my account and I put my stop all the way up here, that is a very big 23 pip stop. And my target's all the way down here, 42 to 1. That's great. I make 2%. But if I was waiting on this, then I would ended up taking the full loss right here. Right? I would have ended up taking the full loss. But if I got in here and then got out, now my stop loss moved from 23 pips to about 6 pips. Okay, and I can take a bunch of 6 pip losers rather than 23 pip losers, right? So using that moving average will help you identify ways to get out early to keep your trade small. One of the things that will help you out a lot is if you never ever hit your stop loss. So if you can get out when the trade starts moving against you, that's a good advantage. Now, if you're like, well, that sounds great, but it's going to hurt my win percentage and I'm going to start losing. Well, that is true. It is going to hurt your win percentage. But what you got to remember is you can always get back in, right? So had this been a downward move and we stopped out right here, okay, and then it took off down, well, just the next time it goes below that purple line, you just get back in. Or maybe you just have another low here. Okay, I put my low. It comes back below this low, and I get in there. So there's never a problem of taking too small of a loss because you get back in. And if you get back in, you take a 6 pip loss, and then this is a 20 pip winner. Now, again, everything in trading, nothing's ever cut and dry. It's trial and error, and it's learning. Because if you tighten up too much and it comes out and then it rolls, and you could take like 6 losers in a row. And then that's like 20-some pips. And then when it rolls, you don't make your money. So you do have to be careful. And maybe that's where you limit yourself and say, okay, I'm only going to take this like 2 or 3 times. If it doesn't go, it doesn't go. Because the chop will kill you, right? So if we go short here, and then it comes here, we go short. And then we go short maybe here on this break. The chop can kill you. But the other thing to note about that, these are 15-minute candles, and so this is towards the end of the day. I wouldn't be trading at this time anyways. I'm trying to trade only when I have a predetermined trend, and so that way I know not to get stuck in the chop. So that's just something that you need to know as a trader. Now, moving on, let's go ahead now and take a look at, actually I'm going to do that in another video because I want to keep these short. The next video I'm going to take a look at using a 20-period moving average as a stop loss. I didn't realize I was going to get this much training out of this one, but I think this is going to be very useful for you. And so in the comments and the homework, just go ahead and add the moving average to your chart and then start looking and doing some back testing and seeing how that would do, if this would work for you to help you tighten up your stop and help you get more longer winners, help you extending your winners and helping you get out of the losers faster. All right, well, hopefully that's helpful. Thank you.